little bit more about this surge in issuance, because travel has been booming since the end of the pandemic.
Yeah, so we're seeing airports booming right now. They're filled with passengers. We're seeing travel numbers exceed pre-pandemic levels right now. You know, everyone wants to get on a flight and, you know, get back to it after the shutdown during COVID. And, you know, you couple that with construction costs being a lot higher right now. Inflation has impacted the cost of construction, of materials, of labor. And so higher costs means more borrowing.
So the question is, are investors going to be eager enough to pick up this debt? Will it be absorbed?
Yeah, it's being absorbed really well. I mean, you mentioned just in the first half of the year, we're seeing $10 billion. That's a 51% increase from what we saw in the same time frame last year. And, you know, even though costs are higher for airports and we're seeing these, you know, construction and inflation issues, at the same time, the debt is being picked up really well.
Where are we seeing this in particular? Which kinds of airports or which regions in the country?
Yeah, so we're seeing this happen at Newark Airport. We're seeing the cost of the AirTrain inflate a bit from the original price tag. In Pittsburgh Airport, the costs have risen for their construction projects. But one I want to highlight in specific is Salt Lake City's airport, since they're in the bond market this week. You know, they're doing a huge overhaul right now. They're basically rebuilding everything except their runways and their taxiways. And that project started off with a $3.6 billion price, but $3.6 billion price tag. Now we're seeing it at just a little over $5 billion. Now, there's a couple reasons for that. The first being that they had to switch their design build. They made some changes. They added more gates to accommodate for more travel, and also construction costs went up.